Hi, everyone. Welcome to the TimingResearch.com Crowd Forecast News, episode number 299 for May 17th, 2021. We are recording this at 1 p.m. Eastern Time. And my name is David Kosmeter. I'm the creator of TimingResearch.com. And today we're going to be talking about the S&P 500 and everything else that's going on in the markets and what we expect to happen this week. So today I have arranged for Michael Filighera to join us again. And the option professor is back to moderate. So I'm going to go ahead and turn it over to him.
Okay. Welcome everybody on Monday morning. We're getting a lot of action in some markets and pretty much dead in the other markets, flat. So we'll get into what's moving and what's not here today. With us is Michael Filighera, and he's going to give you a quick background, and then we're going to get started. So Michael, a little background on yourself and what's happening at the
Traders Helping Traders.
Yeah.
And good morning to those of us on the West Coast. Good afternoon to everybody else. My name is Michael Filighera. I am with LogicalSignals.com and also TradersHelpingTraders.com. My background is that I have been trading in the markets for over 40 years. And originally I was an options market maker. I traded here on the floor in San Francisco. I've also traded in London and Amsterdam and in Germany before returning back to San Francisco. I went off the floor once everything started to go electronic, and I continued to trade options, but found that I was missing some of the floor benefits of being a member of the exchange, and was not as easy for me to keep playing the volatility, which I love to do. So I then changed and I became a day trader. And day trading, the futures allows me to just really partake in the volatility and also not to carry any positions. So that's what I do now. And I currently have two podcasts that I do every day, video casts that I do every day, one on the S&P and one on the NASDAQ, and very near-term plans to reopen my trade room.
Okay, sounds good. And let's get right into the action here. On Monday, we generally hit the guest with a couple of questions. First question is what do you think the market is going to do this week from the opening until Friday? And so S&P, using that, opened around 4169, currently in the 4150s, right? So where are we going to be between 4169 and Friday?
I believe actually that we will be lower, and I'm giving that a 70% probability.
Okay. Now, as far as your reasoning behind that, either technical, fundamental, or both, where do you?
It is more technical actually at this stage. And can you see my chart?
Sure.
Okay. If you can see my chart, I've included and my Elliott count as well, and I just need to put this up. And this is the high that we've had so far. What was 4,238, I believe, somewhere up in that area. And you can see that I just got a 5 and then another 5 above that, because I've not completed what this all would be finishing, because the market then tells me versus I tell the market. So right now I'm fairly satisfied that off of this level, we're in an Elliott ABC corrective phase. And then so what I try to do is go up a degree as to how large of this correction is going to be. And what I believe we finished here is an intermediate third wave, which sets it up to do an intermediate fourth wave correction. So that's going to take the shape of an A, and then a B, and then a C. So the A wave has taken the shape of a 5-wave decline. And then I've got all the little internal count as well. So that makes it's all nice and clean. And so after this, this then completed what I will be labeling as the A wave. Now I believe that we came up to a resistance level that I felt would complete this B wave. And so I'm going to put a B there, and it is an A and a B, and then it takes off again to finish that. So it's in that first stages down of a C wave. And I'm not convinced just yet that it wants to go all the way, but we're off to a decent start from where we closed on Friday and to where we traded during Globex and then now. The market is just kind of waffling around here, but I feel that if it can break below that 50-day moving average, which sits at 41, 40, yeah, right about 41, 42, 50, somewhere in that area, then I think we start to get down and we start to break these Fibonacci support levels. Ultimately, if it indeed is going to be the C wave, then I'm expecting it to move below 4,029. Does not mean it's going to happen by Friday, but if I go and look back what we did all of this in a week. So there's no reason why we wouldn't do all of that in a week. And then once it's complete, and all it needs to do is to put in a new low below 4,029, and I've got support there, and I can pull this open. This is where I think it's going to finish, 39.70-ish, we'll say. And then once it's done, I would anticipate a blast off of that. Wherever that low is going to come in, it's going to blast off of that to tell you, that's it, we're done, and the buyers are back.
Yeah, if you're a momentum player, clearly a break above 4180 would tell you that you're looking at a situation where you've had your pullback to wherever this thing stops. And then if you get above 4180, that'll open up the window if you think new highs are in the picture.
That's absolutely correct. That would be, as when I'm working with an Elliott, I have a preferred count and an alternate count. What I just described to you is my preferred count.
Yeah.
And then the alternate would suggest that this completed the entire correction. And this is the first wave up of a new 5-wave rally.
Right.
And this was just a corrective to that. So yes, I agree with you. If it breaks above 4180, then
and that would be a third wave. And would that be a third wave? And that's a very powerful wave?
It would be, yeah, it actually would. So, and thank you for mentioning that, because how it's going to prove to you that it's a third wave, it's not going to hesitate to break in one solid whoosh back above 4180. It's not going to go up and come sit around and wait. It's going to announce, I'm a third wave, get out of my way, and because they're powerful. So yes.
And it would probably be correlating to some kind of a news event that would be moving the markets, right?
Could. Sometimes, as you know, these things just move sometimes just cause.
Yeah. And like I say, right now, there is no evidence that that is going to happen. The only evidence we're really looking at is that it's involved in a 2-wave, right?
Yes.
Or whatever this, what were you calling this current down move?
This would be a C wave down.
C wave down. Okay. C wave down. Gotcha.
Yeah.
Yeah. So it'll be very interesting to see how that happens, because again, there's a lot of people out there who were saying, Marco Kalanovic over JP Morgan and Tom Lee, that this low that we just saw is overdone, was one word they used, and a failure for the market to break.
Right.
And so their thesis is more like this low we just saw here at 40, let's say, that was a failure for the market to break, a failure of the VIX to break 30, and an overdone sell-off that has seen its days. And obviously this move back up here made them look very correct. So
yes, it's true. And that always is the problem. And what I add to that, because that's good, what you're saying, is that this would be, if this is an A wave, this is a B wave. B waves are deceptive. B waves will lead you into the land of promise. And then once you get there, you realize you just stepped into hell.
Right.
But I wanted to just take a quick jump up to at least a weekly chart, and you can see what the market needs to correct is this move all the way up, or actually it would be from here. So it's going to correct the rally from 29.25, let's call it, up to that high. That's a lot of territory to correct. So that's why I always disagree with an analyst who might come back and say, well, you know, this is overdone. Really? It's correcting over, 1,800 S&P points.
Right.
So when it moves down 200, yes, that's a good start. And yes, it felt like a lot. And yes, it moved quickly because it happened in a week. But that it's not overdone. Not in my case.
Now I got
And-
another question for you because we're talking about the S&P right now. A
Yes.
couple of things that I have heard, and I take information in from all sources, and then I make my own opinion.
Of course.
Robert Prechter in January interview was suggesting that in 2021 we were going to get a high point of very big significance, and that there would be some type of an unwind next year. Because whatever the reason. And then I was listening or reading Robert Schiller's CAPE index, which is rather than using 12-month trailing PEs, he
Yeah.
uses an average inflation adjusted earnings over the last 10 years. So PE is generally a 12-month comparison. He
Mhm.
uses the inflation adjusted earnings over the 10 years. And that CAPE ratio is the highest in the world. The US is the highest in the world right now. And basically, give you an idea, the ratio is at 36.6 as I
Wow.
read this earlier in the month. And that's 98% of the monthly reading since 1881, which means it's in the 2 percentile of high readings.
Wow.
And basically, to give you an idea, it's more than double the 140-year average.
Yeah.
So this CAPE ratio is indicating that we are in very rarefied air. This Robert Prechter and his Elliott wave stuff is saying there's a major high point this year. And since we're
Yes.
already in June, this year is not exactly have unlimited time left. So
Right.
my question, having said all that, what can you extrapolate using either Fibonacci or something where you could say a high point could happen?
I
Like
think I definitely agree with that. A high point is due. And what and how I would extrapolate is because if this completed an intermediate third, now again, I'm going to go out to the long-term chart, so this is going to be easier to explain. So it's
Right.
very
And then
visual.
you have those Fibonacci kind of levels on the longer term
Yes,
chart, don't
yes.
you? Yeah.
But if I consider this, that we also see, that was a fourth wave of a cycle degree. That's huge. Okay, that's very long-term cycle. Now, so when we moving up and we're counting a cycle degree fifth wave, it's going to have 5 waves of primary degree, 5 waves of intermediate degree, and then break down from there. So right now we've completed 1, 2, 3, 4, the 4 waves of primary degree. And now we're in that 5th wave of primary degree. And within that, we've completed possibly 1, 2, and 3, which, and if, so now going back again to the other chart, that would tell you that if this is the top of 3 and this is going to be 4, then we just got one more intermediate wave up. And if this completed it and this is the start of it, then my God, yes, it's going to go, and we're going to go back to 4,300, possibly 4,400, up to, all the way up to 4,700, depending on how hard they decide to push. And that's going to complete an intermediate 5th wave, a primary 5th wave, and a cycle degree 5th wave. That's the end of the end of the end. So
now,
in terms of
with regards to any Fibonacci levels you can put on the screen like you've done in the past, that
to
gives
show
you
where it could go.
Yeah, exactly.
Sure.
Yeah, I've always found those interesting because some of those targets actually end up getting hit.
Yeah, they do. You're right. And that's why Fibonacci is so beautiful. Let me go back out to the daily. Say, for example, that we're now going to be looking for a 5th wave up. And so I'm going to start from, and this is going to be a little bit harder because I can't see all my moves going up, but we're going to give this a try. Okay, I've got my extensions on. So I'm going to go, no, I'm going to do it from down here. I'm going to put it here. Come on. And then I get a fussy computer. I would run Fibonacci extensions all the way up if I can find this high. There it is. Hey, how about that? And then I'm going to go down to the low that we had down here at 4111. Come on, get down there. 4111. Come on. Oh, that's 94. Pay attention to my other one. 3, 5. We'll go there because I'm close. That's eyeballing. So let me go back down to my hourly chart to see how we did. Yeah, we came in, we're pretty good. So we're going to get some indications here. Now I'm going to move this up. Look at where these numbers come in for this fifth wave.
There you go.
Now the most common is that fifth wave up is going to have a relationship to the third wave. So this is where it would be 0.236 of that third wave. This is where it'll be 382 of that third wave. The most common is right here. The fifth is going to be 0.618 times the length of that third, and that's 4,821. And that's powerful. And the thing is, you might say, what the heck could take it up there? What the heck could take it up to 4,200 that it did already?
Mm-hmm.
You know, so when people ask that to not only me, but I'm sure they ask you, it's like, I'm sure that there will be numbers that are out that people will stand on, that there's going to be earnings that people will stand on, whatever the situation is. But let's not forget that many times when a market is screaming higher and it's doing a blow off finish, it is because everyone's convinced that there's no more downside ever. So a lot of it is an emotional push. And that's where you really got to be able to stand back and use if you use Elliott Wave, use that. If you use Fibonacci, use that. If you use moving averages, use that. Use your technical indicators to keep guiding you where you need to be and not get stuck in the euphoria. So it should be fun to trade it once it occurs, but those would be the areas. Those would be the areas. Now I'm expecting the fourth wave to come down that's currently in force to come all the way down to these lower levels. Actually, I'm thinking, 3,000, right, this one, 3,969 or 3,970. And then it's not been below 4,000 for quite some time.
No.
So to get back down, there's going to shake some of the kids, it's going to shake them up a little bit. And that's perfect time when other market makers and other traders are going to be like, perfect. And they're going to swoop in and push.
Well, that 4,500 number at 38.2 seems pretty interesting because it's about an 8.5% move from today.
Yeah.
And 45.10 minus, what was the high, about 42.35, something like that?
42.38.
38. So basically, yeah, it's a 6.5% move higher than the high.
Yeah.
And at that point, the CAPE ratio would have to probably be off the charts at that point. But, a combination of the earnings spike because of the demand coming back into the economy, and everything costs a lot more. So
yes, inflation, but that could be the ticket that'll kill it.
Yeah, but not until it does the big run. And then if it does run up there and you got gold at 2,400 or 2,200 or something like that, then this Fed that's been sitting on its hands, may have to act. And once they start acting and withdrawing the monetary stimulus, that will change the mathematics at that point,
Yes. Because and people may ask, well, what could happen? Why could it do it? It's like, I actually still think that even though the corporate tax rate will go up and people making more than $400,000 a year expect to pay higher taxes, I think that the fact that if the infrastructure bill gets passed into law, the creation of the new jobs, solid jobs, is really what's going to excuse me, carry this market higher.
Yeah.
Before we realize, oh my God, we've created too much inflation and things aren't looking good, and then we're going to correct. But I still believe at that point, the general population of the country, which is finally going to be able to get back to work, they're going to continue to have those jobs. So it's just going to be truly a market correction that it's going to take a lot longer for all of that junk to filter out through into the general populace, because they're not really the ones that are in the market. So we get that reverse going, if you know what I mean.
Now, what what kind of account would it be that 42.35 is as good as it gets?
42. Well, from here, it would look pretty ugly. Then you're just drawing your numbers. And I'll tell you how I normally start. I normally don't go too much further out. I would go from here and draw it and then down, and that gives you these numbers. So this would just be a beginning to what we can look at. But if I have done one where it goes all the way back out to that big picture, and I put it on, and we're talking down. We're talking way down here. You're talking like this thing has potential to, if you're going to be taking it from this level, which was a 4, and that's going to correct this entire fifth wave move, you know, that you're talking about the low in 2008, 2009, and that was 665.75. So what's going to get corrected is the move from 665.75 all the way up to wherever this thing tops out. Now, if it's topped out to where you just stated, like 42.38, well, you're looking at, okay, well, let's do something. Let me just change all this. Let me get rid of that one and go back over and put in just a different one. And then I'm going to give you that number. So now we're just going to do Fibonacci retracements, and we're going to use this low because what we're going to correct is that entire move. Let me see if I can get and go right there. Come on, there. So look how high these numbers are. So in essence, you're really, and again, 618 to 50% is a pretty decent move. Look at them, 24.42, 2022. But please understand that that was a super cycle level 4. So if we're correcting the super cycle run, and the initial leg is going to be off of this big move, that's going to take years. I mean, this super cycle move really panned out and formed, if I can get back to my maximum chart. And okay, so it took from the March 2000 high to 2009. It was a 9-year correction. Now, this has been about a 12-year rally. So even if you think 40% out of 12, you're looking at, 4 or 5 years that this should correct. And it's good, but it'll correct in a down, up, down fashion. And within this one, what was surprising is that the Dow in this move made a new all-time high in a corrective move. So there are so many possibilities on what form the correction can take. An ABC is an ABC, but it can take many different shapes before it's all said and done. So again,
what do you think of this as a scenario in that if we take out 4180, the idea was we're going to go after that high and that 4,500 is possible. If we, by the end of June, don't take out 4240, 4238, and take out the 4025, 4030 area that it just established a low point at,
yeah,
then the
it's a
odds
failure.
that the odds of 4240 being the high point of the move increases dramatically.
Very.
So that's not,
And
because people, sometimes people are more helped by just getting ideas of, okay, we think it might go to 4,200 or 4,500 on some kind of a big run. And in
yeah,
order for that to be a reality, what would really increase the odds? Well, above 4180 would take the odds very much higher that the 43, 4,500 thing is still in play, right?
it's still in play.
Right.
So
Now,
I think it's cleaner to say, it might be cleaner to say a break above 4180 increases the odds of at least getting to these upper levels.
Well, that's all we're saying. It would increase the odds that these numbers, I mean, we're not the only ones talking these numbers. The whole freaking street is talking 43, 4,400, right? So
Right.
the bottom line is that does that make any sense? Right now, it doesn't make much
Absolutely.
sense because right now we hit a high and we haven't been able to take it out now. And then obviously it's fading, and it faded very
Right.
big. And then of course the CDC said take off the mask, which caused a rally last week, but that rally has already faded. So, if we can't get above 4180 and another month goes by till the end of June, and all of a sudden we've taken out 4035 or whatever the low was during that drop, then that would add more credence, and that might even take a lot of these RSIs under 50.
Yeah, and the other thing is, I'll tell you, like Friday's rally, they may have given it credit to the fact that yes, CDC's lifted guidance or changed guidance, and that does provide some positive news. This actually was just all Friday's expiration in my view.
Oh, was
And
it, what was Friday?
it was just a weekly expiration.
Oh, the weekly
is
expiration.
the
yeah.
monthly is this Friday.
I
So
gotcha.
here I've got this whole thing going. It's like, okay, you guys want to roll out of your sell in May and go away positions,
Yeah.
which will expire this Friday, maybe. I don't know. But what I have found is that sometimes those moves have no correlation to the reality that surrounds the market at that moment. So let's not forget that if this thing drops down and it gets it done this week, that leaves 2 weeks for them to just say, we're just going to, it's a moonshot, folks, it's a moonshot. And they just start, they walk in and they buy it and they buy it and they buy it and they buy it, particularly if this ends on an expiration. So if this pulls itself lower and it does a big leg of it on Friday, watch what they do on Friday's close.
Yeah, I think this 4160 number is kind of important. I have some shorter term
Yes, I
moving
do.
averages that make 4160 actually a big point. So,
Yes.
and again, when we're going into Memorial Day, my imagination is that that could be a period where it does do a big acceleration to the upside because
Yes.
people,
Yes.
don't want to be short over the weekend. Maybe there'll be some kind of a report that makes people excited again or whatever.
Yep. Yep.
And so I think it's very, I think the next, 6 weeks could be very, very exciting because you're going to be going into Memorial Day and the 4th of July in the next 6 weeks.
Right. Right.
And so obviously, if we are going to take out 4180 and make a big run at it, that seems to be a time frame where it could happen.
Yeah. Oh, I
And-
do agree with you.
You know,
And as always, and as I tell people that follow my video casts and just follow my trading, is that I always allow the market to tell me.
oh yeah, yeah,
Instead of me telling market.
yeah. That's why I say if the market breaks through 4180 and you're bearish at that point, I think you need your head examined. And then and then if we go another month and this thing is blowing out 4,000, 40, 50,
Yeah.
again, and you're still thinking it's going up, that's a little crazy. But
Right.
a lot of people were looking at the small caps as a big key to whether this thing is going to go or not. And I was looking at IWM.
Yeah.
So if you look at IWM, some people were saying this thing is indicative that there's going to be a move, but I see it stalled out at this 219, 220 area. And
Right.
it has been very dodgy since it hit its high point. But above 221, does it look like that might have some truth to it? 222?
Yes. Above 221 would have some truth to it, but the way that this is set up, this was the first leg down. It's just a bounce hovering around 219, which it should do. Do we
Yeah.
bounce a little bit more high or do we start to go back down? And I think that if it finishes the day below this 50-day moving average, then that 219 was pointless. It is an area right now. I got the 20, the 5, and 4, and the 8 all grouped right there. And that is what's kind of, see it all? And even the 200, that's the 200, that's the 20, that's the 4, and this is the 8. So the 50 is pointing sideways. So basically your moving averages are telling you it ain't going anywhere. It's
Yeah.
just bouncing back and forth on a sideways. This is an hourly chart. So maybe for today, it doesn't go anywhere. Maybe it drifts back down and goes for a retest of the 50-day moving average again. But it's kind of just comfortable right here. So if I had to say anything, and we could put a point of control up here, it's going to fall right here. And because
I'll
that's
tell you,
where the value is.
The other thing that's a little exciting on it is that its RSI is hanging right around the 50 number now. And so
Yeah.
if it does take out 221, 222, 223, and now your RSI isn't trading at 49 or 50, it's trading at 53 or 54, it may very well be giving you a heck of a nice signal. And
Right.
if it went to 222, 223, and then your get out point is 218, that's not that much real estate between your entry and exit.
No, and I'll tell you what I look for to give you confirmation. You could do it on a 30-minute chart. You can do it on an hourly chart. Please do it on a 15. And then if you're a day trader, pull in your 1, 2, and 5-minute charts. Is keep an eye on your moving averages. When your moving averages all line up and they're aligned between your charts that you're using, that is a significant signal of direction and what the intent of the market is.
Mhm.
And if they're all pointing up, and what I mean in alignment is that this is the 200, the 50 would be above the 200, the 20 would be above the 50, the 8 would be above the 20. You know, so, or if you
Kind of
use
like
a
when it was
10-day,
coming, kind of like when it was coming down, all systems were go on the downside. Right?
yes, they were, absolutely. And they remained that way. And then,
And we are Michael, we are in a congestion area, and obviously
Yep.
congestion ends at some point. So you've got
yes,
a nice little eye of a tornado possibly occurring here, but it's still
Yes.
any man's guess which way it's going to break. But what the averages are kind of saying that there's still a decent chance it could go to the upside because they're all converging around 218, 219,
right.
220.
And we have, and as soon as, and again, I'm going to even take this down to a 15 so that we can see inside a little bit cleaner. And we can't, but let me do this. It's going to look weird, but see how the 4, the 8 are sort of trying to pull lower. Not a lot, but they're kind of starting to pull lower. But here sits the 20, flat as a pancake. The 50 above it, flat as a pancake.
Right.
So they're telling you we're not going anywhere right now. And that's what your moving averages are telling you.
Yeah. But if the
So-
numbers started looking like 221, 222, 223, it would be telling you the
The
train
hook.
might be leaving the station.
Yes, and what will give you confirmation is your 4 and your 8 and your 20 will hook. They'll hook, and what I mean by hook is like it'll form a hook, and that hook will be pointing higher.
Yeah, and this
So-
has been in a kind of a range since February.
Yes,
So
but it's had its moments. It's had its moments of
Yeah.
glory, and quite often, I've not more recently, but quite often, it is the Russell 2000, which is the basis for the IWM, but it's the Russell 2000 that will suddenly lead the way out of the wilderness.
mhm.
And
Because you got
so,
small
yes,
caps and you got your reopening stocks in there. A lot of companies that got hit during COVID.
Right.
And obviously, if they get going, that means maybe the economy is really picking
Yeah.
up steam. And
I mean, right now, I still favor the infrastructure plan being put into place and being.
you think at
being law.
2.3 trillion, though, a lot of people are saying they couldn't pass 2.3 trillion if they had a bow and arrow.
That they couldn't get 2.3 trillion?
Yeah,
Or
in
they
other
could-
words, the Republicans are not going to go for that kind of number.
The Republicans have already said that they are not, there isn't going to be a Republican vote on it no matter what. So why bother?
So, well, then they might just do that unanimous thing with the vice president doing the,
Exactly correct.
yeah.
So I believe that the intent of Congress right now is to get it passed.
Uh-huh.
Because once it's in place, I hate to say it, once it's in place and functioning, watch every Republican stand up and say, I did this for you guys. See what I did for you?
Yeah,
My constituents in my district,
Yeah.
now put me back. So I don't put a lot of weight on that. I put the weight on the fact that within the American public, both Republican, Democrat, and Independent, it is extremely favorable. And the reason it's favorable because there's been too many people that have been unable to participate
right.
in this glorious run in our economy, quote unquote. And
Right.
this will give them the opportunity, they're back in. And so it's rebuilding America. And my Lord, we need it. Our bridges, our infrastructure, our roads, and just
Yeah.
even the super electronic highway. You know,
Something just happened with some bridge over Route 40 in the Mississippi,
in
didn't it?
Tennessee. It was
Yeah.
in Tennessee.
Yeah.
And they stopped it, traffic, and they had to stop. the
700
traffic on
boats
the
or
river
something. Yeah.
because
So,
they
yeah.
found a crack in that bridge. So
Yeah.
yes, so we're getting more news in terms of supportive of this thing being passed and people getting put to work with good paying jobs, with insurance. And if people want to bounce and go, well, that's a lot of money. You're never going to get that kind of money. It's like, guess what? When people are going back to work, the tax base increases to the federal government, to the states, to the local governments, because people are working and now they're paying taxes. And if we're putting millions of people, we as a country are putting millions of people back to work across the country, there's not going to be a Republican that's going to send a complaint because their coffers will fill up very quickly. And I believe that the market will react to that It may just take longer. We still have this correction in line, but I see that the underlying positive is going to outweigh the need to pull back. But right now, we do have inflation worries. I don't know about all the rest of you, but every time I go to the grocery store to buy, suddenly my weekly grocery bill is up $40 over what it was.
Yeah. Or, you go call the airline, and unless you want to stop 17 times to get to your destination, it's going to be $600 or $700. And then if you want to rent a car, even if it's a go-kart, it's $500 for 3 days. So
even if you want to rent it from the bankrupt company.
Yeah, Rent-A-Wreck is going for $700 a car.
Amazing, right? Yeah.
So
no,
all right, let's. How about you want to throw a couple of stocks up there that I think are somewhat important to look at? One would be
Sure.
Amazon. And Amazon had a peak last September, and then it had another peak recently at the same
Right.
exact level, and it's been coming off of those levels. Is that indicating anything possibly macro, that Amazon hit a peak in September of last year, then hit another peak this year at exactly the same price pretty much, and then basically
I think a lot of it, as if you on a macro level, is that as the economies reopen, how much business will Amazon give up to people actually going back to a hardware store, going back to where they buy all these products,
Right.
and going out and
Clothing,
doing their own shopping?
Right.
I think a lot, actually, because I think Amazon went up. But is Amazon a bad company? No. But I think there's that period of readjustment to the reality. Now, I'll tell you what will upset this apple cart to the upside is Amazon finally decides, you know what, we are going to do a stock split.
Yeah. Okay. Yeah. They go
That's what I
5 to
think.
1. They go
Otherwise-
10. They go 10 to 1 or something like that, and all of a sudden it becomes.
Oh boy.
Yeah.
I'll take a piece.
Yeah.
So yeah. So, but right now, I think that Amazon is still a brilliant company, makes billions of dollars every quarter. But I think that we need to make some readjustments on what we feel that expectations moving out 2 or 3 years need to come in. And I think that's really what's at play here. Although this morning they raised it, and they raised it up $65-$70 because they're going to give their music away for free. So
I got a P/E ratio on the stock of, well, I don't have, about 61. That's kind of cheap. When it's above 100, it has been a time where it generally has pullbacks. 61 is much more reasonable. So,
but that could just be this initial leg down. And now, see, but this is it. There's the high. That was the earnings. They rejected that pretty much, and then just started heading down. And it just has done 5 waves down already. So that's the first leg. This finished 3 legs up. That's the correction to that. So now, in my estimation, it should continue down. And sure enough, that's what it starts to do.
How about Apple? Let's look at Apple, because everybody loves Apple, and that's a beneficiary of splitting.
It is a beneficiary of splitting, but here we have the exact same chart almost as Amazon. Spikes on their earnings, cannot break 140, sellers are showing up. And then they show up a little bit more intensely here. But that just completes the first 5 down. Then it does its little 3-wave, then it starts again on 5 down. Then it does 3, now it's doing another 5 down. So it's going to be a little bit bigger 3-wave rally. And this is the deal. I mean, people, if you don't understand Elliott, they're building blocks. And so each time you finish a 5-wave structure down or up, you are due for a 3-wave correction, either up or down, depending on what direction the trend is. But I still think for right now, and again, hourly chart, so it's not like it's long term, but I think we need to finish a correction. And being that Apple is one of the biggest parts of the NASDAQ, because the NASDAQ to me it is now breaking below 3,200. So I originally this morning was feeling that the NASDAQ would get itself down to 13,200, but now it's dipping below, which is so directly in line with current analysis of mine. And they're just corrections. Does not mean the companies in it are bad, just means we're readjusting value. And we're just, and quite frankly, even sometimes it's not even that. It's just a matter of how the options and those traders are trading. Because when you're hedging, maybe you're buying calls, but you sell the stock, or you're selling puts, so you sell the stock. So there's just too many things that get involved, which is why I tend to just basically keep into that technical picture. Like right now, I should find some support at 3178, 3180 in Apple. Excuse me, in the NASDAQ. But in Apple, that would portend that maybe we get, again, hourly chart, take a look at your moving averages. Your 50's not, your 50 is below, but it needs to, these other three, the 20 and the 10 and the, or the 4 and the 8 need to get itself below that 20, which they are. And now they all need to get below the 50, which they are doing. And I think once that lines up, Apple will drop. And I'd be ultimately looking for, it's a $4 move from here, $4. Now, when you're looking on a chart, you're like, wow, that's a big drop. It's like, well, yeah. You know, if you're holding the stock from 135, you don't want to see it at 120. But
this is another one where if this is a pullback, when it breaks above 128,
it's going to go up.
It might be going up. And if I look at the bottom area, stochastic momentum, obviously we are getting into a lower area.
Yeah.
So, you know, if it bottoms out here and then takes out 128, that might be a train that's going somewhere.
Well, let me just, but here by using Fibonacci then, and I'm going to go from that high, give it to me, come on. We go from that high, like there, got it. And I'm going to go to the current low for the sequence, 121. 382 is 128.45. And that's the most common retracement. The next one up that is 50%, you're talking to 130. So you're right. If it were to break above this level, you definitely wanted to, you know, you're going to maybe get 45 more cents, because that's 128 basically, right? And that puts you above that 50, which is a positive. But you're going to have to ride it through these resistance levels. Yeah. And they're going to be tougher.
All right, let's before we run out of time, the two hottest markets in some respects is metals and oil. So let's take a look at something like GDX and get an idea of how those gold shares are doing. Yeah.
Jim, is this the one you were speaking about this morning?
Well, I actually have other ones that are even doing better than that. Yeah.
This one doing pretty good.
Yeah, right. But there's others doing even better.
Yeah. Well, and I'll tell you, this is a beautiful chart. And this is what you can really take to the bank in terms of if you do your Elliott correctly. Yeah. Here's an A, a B, and a C. And then although you had one little sell off there, but I think that was just somebody blasting out of positions. Did not move to a new low, came down, almost touched that 200. So if anything, you added more. Then it goes up, and now it just does a simple correction. Doesn't even break the lows of these, and then it starts to rally. It has its moments where it has difficulty, but that's because I think it's related to the fact, even though these are gold miners, but gold itself had its days where it would kind of like go up and then slip and go up and then slip. But once it got here and it no longer slipped, and this would have been this morning, gold started to rally pretty strongly, and look what it did. It just goes right up.
Well, it got above its 1 year moving average, which came in at about 1845. So once it got above 1845, it was kind of like get on board. Now, the good thing sometimes about, is obviously there's risk on all this stuff, but gold is up like 1.68% today, but look what these mining shares are up. I think it's significantly more.
4.5%.
Well, that's a lot more than 1.6.
It sure is. So but then again,
that's why you have some leverage when you go into the, it's a leverage play on the gold without, since it's fully paid, it's not like a futures contract where you have a margin requirement and forced liquidation and all kinds of stuff. You own the asset,
Right.
What about the silver SILJ? That's one that's not doing so badly either.
These are the junior silver miners.
Yeah. Hey,
Oh,
what the
wow.
heck? If you're going to roll dice, you might as well roll them all the way, right?
I'm telling you here, if you could have survived that, which was early in Globex, it was early
Mhm.
this morning in
Yeah.
Globex. I'm not sure why, but God, they just all bailed on this thing. They took 50, 60 cents right off of it.
Mm-hmm.
And that was a very negative bar.
Mm-hmm.
Following bar was kind of an inside, but this started to form a bullish engulfing. And then this one just completed it and engulfed it within the second hour. And then it was like, yeah, you needed to be buying it. Those are very, very bullish bars. These pullbacks are nothing. Look at that tail. That is a bottoming tail, not a topping tail.
Yeah. And like I say, the fundamentals on this, you got real interest rates that are very negative. You got inflation numbers that are posting. The core is averaging 11% right now, the core.
Right.
So you take that kind of core against a negative interest rate, and that is the kind of environment that gold and silver really should benefit from.
Right. And I actually think,
but then again, it could pull, like I say, it can pull back and be choppy for whatever. But if somebody
Right.
was to say, what do you think 3 or 6 months out it looks like on this stuff? You
Well,
would have to say that the environment
well,
is definitely looking more favorable.
well, this is silver. Okay. This is
Mhm.
this is the future. I'm just let's go look at a weekly chart. It's been in a chop fest.
Yep.
And right now it's looking like it's going to break out. And so if it breaks above that level, folks, 30 bucks. Woo,
Yeah. And that may not happen till later in the summer or the fall. You never
it's
know.
correct, because
But
look,
like I
we're
say,
pretty overbought.
the key to this stuff is to not buy so much that even if if it chops around, you have to get out because you have too much leverage.
Well, the fortunate thing is you can always go over to SLV and grab a put.
Yeah, if you wanted to hedge it.
Yeah, and protect it, because you don't really want to get out of your silver position.
Yeah.
Yeah,
in the
or
newsletter,
sell puts.
in the newsletter, we were talking about 1675 on the gold, and we were talking about 24.25 on the silver being probably the lows for the year, and obviously looking for upside off of those levels. And so that was in, I think, March. So April and May have clearly been better months for the metals. And again, looking down the road, they could go back and forth, but these averages seem to be holding pretty well, right?
They do. And in fact, this is the original pandemic. Get me out of everything.
Exactly.
And then it just rallied. And I think, I like silver, but again, my big daddy favorite has been and always will be gold.
Yeah.
And I've got some charting on this one too. And I had felt that this was B, and then we had a C. And I thought we still had some additional, like a 4 and a 5 still to go. That is not the case. And so if I go back, I'd have to change my labeling and take these two out, because they completed here. And 3 and a 4 and a 5. They were very quick. And this is a C. And now we're into this next rally phase in gold. And that rally phase should ultimately take it back above 2000. Where did we get to? 2089. So I'd be looking for above 2100 in this one. But again, we're on a weekly chart. So you're buying and you're holding, you're buying and you're holding. Now, what could go against it? Thus far, it looks like it's only done a 3-wave rally up. So you're going to have to put some limitations on where you believe, if it starts to fall below these moving averages.
Yeah, I mean, I think 1800 is a ballpark area, give or take $5 or $10. 1800 is extremely important that any pullback holds.
Yeah.
And again, I really think that this 1-year moving average coming in at 1840, 1850 is very important for it to hold. So if you're playing it on a short leash, you got 1845, 1850. If you want to give it a little more rope, then you got 1790, 1800. But if it's something you're thinking 3 or 6 months down the road, and they keep getting the negative real yield, and they keep printing money, and they keep inflation numbers spiking. I mean, it's hard to argue that we're not going to be in a decent metals environment in the next 3 to 6 months between now and the end of the year.
I agree. So it's really, if you're if your strategy is long time hold,
Yeah.
and this is what I'm saying to everybody that's listening this morning. If your strategy is to hold gold and you want to hold it because you really do believe that the longer term picture is going to take it back above 2000, please contact Jim so that he can show you how you can hold it.
Well, like I say, I mean, you know, in the newsletter that we have each week, we give our opinion and our observations on this stuff. So this is not news to anybody who's been reading our material. Again,
Right.
the move down to 1675, we identified that as the low by simply taking the high of 20, the range from the beginning of this thing. Can you see it starts down there at about 1050, runs all the
Yeah.
way up to 2065. And if you take 38% correction off of the move from the bottom to the low, you got
It was right here.
1675.
Oh yeah, that's what we did. This is
Yeah.
what we did last time.
So
There it
that's,
is.
you know, so that's where we got that from. We didn't just pick it out of our ear.
Oh,
And now,
absolutely. Yeah.
obviously, you follow the moving averages up. If it keeps going higher, your averages are rising and you try to ride the river, you know?
Right. And they really are now falling much cleaner into line where
Well, people are deciding that the inflation numbers aren't going away. And if the Fed plans on keeping interest rates low until the unemployment goes back to normal, that's like waiting for Godot. And so these rates could stay low for a very long time. But I think that's going to change once these economic numbers start changing. They're going to have to throw the unemployment rate out a little bit.
But don't forget that even geopolitical uncertainty makes gold traders
Well,
very
exactly. I don't think the skirmish in Israel is hurting gold.
nervous. It is definitely not hurting it. No.
Let's switch over to oil with we got a little more time here. Put up the crude, and then there's a couple of stocks that I've been
Sure.
keen on, Halliburton and Schlumberger, and
Sure.
they seem to have a very bright future if this stuff is going to keep going. So crude oil would be the first thing to look at.
Let
And
me
our
put them
position,
monthly because we really do want to look at the longest picture.
yeah, exactly. We're not day trading this particular one. You can do anything you'd like, but I was trying to look at it a little bit more of a macro deal.
Yeah. What size chart? You want the monthly? You want shorter?
Yeah, we could go weekly and just get a couple of years.
We can. There's 5.
Okay,
This
there's
was
a 5.
the
Yeah, there you go.
nasty drop where
Mhm.
we went negative.
Right. Where the
Um,
frackers got shut down and the rigs got shut down and the private investment got shut down. Yeah, that's the time. Mhm.
Yeah, it was.
And that means your supplies are what? Contracting, right?
Mm-hmm.
And then you had OPEC behaving by contracting. So obviously you got a supply dynamics not dissimilar to other commodities. And now the demand comes in, and there you go.
And it's off to the races. But here, what I found so amazing is that people needed, and this was also had to do with the futures market as well. People that were long futures
Mhm.
there was nobody that was going to buy them from them. And this thing just sank and sank and sank. And they didn't want to pay for the storage.
Mhm.
So they actually were selling them with like a $42 negative, which is basically paying somebody come in and take my contracts, and then I'll help pay for your storage.
And that weird snowstorm in Texas got the refiners going as well. So,
Yeah.
but
Everything.
let's look at like about a 10-year graph with some good moving averages on Halliburton, HAL, and Schlumberger, SLB, and see if the potential that I was thinking is actually there in your view. Because this stuff used to be, well, you'll see from the chart where they used to be.
But this is, that's not going to give you 10 years. Let me see if I can pull it open to a monthly. Yeah, here you got your 10 years here.
Yeah.
So here's 2011 and all the way out.
So it's at a point where if it gets going a little bit, there could be some potential to this thing.
The moving averages are starting to agree with you, but they're not there yet.
No.
I think this is on a monthly chart. 26 area is going to be a toughie. It's going to provide a stronger hiccup.
Yeah.
And then you got 31, which would be another pretty strong hiccup. Now, if it gets above both of those, it's clear sailing.
Yeah. And if you go up to 31 from 23, you're talking almost 40% jump in price. So that's not going to hurt you, even if it just went up and tested that.
Absolutely.
And Schlumberger is SLB.
Right. I like Schlumberger better.
I think you're right. Yeah. 'Cause look at
It
that thing.
has,
I mean,
it has
this
more
thing goes
room.
out back to where it came from. You're talking 64 to 100,
Yes, again, but even here,
$30.
say you got in a while ago, maybe you got in at the 28 or $30 level, you
Yeah.
got a nice little profit running right now, because it's
Right.
going to have a hiccup at 40 and a half.
Yeah.
And then it's going to have a hiccup at 55 and a quarter.
Yeah.
So
If you're trading them, you got to be very nimble. And if you're looking for an asset to hold on to, that's another story.
right, I think the trading part, I like it, and I would use, what a lot of the positions that you recommend, and that would be
Well,
using.
my observation, my opinion is that the metals are an asset you'd want to own, and these oil companies are an asset you want to own. And just like you'd own property or anything else, if you want to own an asset, these assets look like they have been going up and they could continue. And there's a lot of real estate between where they used to be and where they are.
Correct.
Whereas how much real estate is there at, on some of the stocks
Right.
as well.
Right.
What about, okay, we'll come to the top of the hour, and you've got a lot of stuff that you offer at the company with, teaching and things along those lines. Why don't you explain how people can get a hold of you and basically, figure out how they can
Sure.
connect with you? Yeah.
First of all, thanks, Jim. Thank you for great. I love doing the show with you. A great show. And thank you, David, for inviting me in today. Again, my name is Michael Filighera, and you can get a hold of me by email at michael@logicalsignals.com or michael@mjf1partners.com. Those two email accounts come directly to me, and I always answer my emails. So if you have a question or you just want to, some more information, please send an email there. Now, currently, through Traders Helping Traders, which is another website I have, we are building a presence there. And right now, I'm just building it through doing daily video casts of my analysis daily analysis on the NASDAQ and the S&P 500. And I am always open to do analysis on, say, for example, gold or individual stock or bonds or whatever somebody else might have an interest in or they want to trade. And I will do that on a separate basis. And I offer coaching on that as well. And that will be covered under the coaching level. All of this is available when you go to Traders Helping Traders or logicalsignals.com. You should find all that information in there about charging and stuff like that. The latest thing that I'm going to be coming up with and going to be doing beginning mid-June is I am restarting my trade room. I have gotten some interest, and people are interested in finding out how I trade. And so I'll be joining forces most likely with a trading buddy that I've had for the last 7-8 years. And we're combining our talents and being willing to teach people day trading skills, how we day trade using moving averages, how I day trade using Elliott Wave, how I day trade using Fibonacci. And the combination of the three, plus I use point of control, we use value area low, value area high. These are very definitive calculations that are put out each trading day, and they move with the market. But the goal would be to help people to become consistently profitable, to return to consistently profit, or if they are interested in getting additional funding so that they can trade. We're all in on helping people do that as well.
Okay, great. As far as Option Professor is concerned, we have a weekly newsletter that does go out, and we cover our opinions and our observations on the stock market, the oil market, the gold and silver market, crypto with Ethereum and Bitcoin, and so international investing. So we cover an awful lot of information, and it's $49 if you go month to month. And if you go for the whole year, it comes out to $24.75 a month at $297. Those are ridiculously low prices to get a lot of information. We've been doing this for decades. I think we bring a lot of value to the table through our knowledge and experience. And so we give you our opinion and our viewpoints on these things and tell you why and where we think things are going to be happening. So that's a lot of value. Optionprofessor.com and then /subscribe. And get on board. You could do month to month, or you can do for the whole year. Obviously, the whole year is a much better deal price-wise. And again, we try to bring something of very good value into your mailbox each and every week. That's optionprofessor.com /subscribe. Okay, we're signing off. I hope you guys learned something today, and I hope you guys sign up for some stuff so you can get our information ongoing. And again, back to David.
All right, thanks guys. Great discussion today. So just a quick reminder to everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast directory or app to get updates that way. Or you can also go to TimingResearch.com to get access to any of the shows there, including this one, as soon as I can get it processed and posted. And so just want to thank my guests again for today. Michael Filighera of TradersHelpingTraders.com and the Option Professor of OptionProfessor.com. And also just a quick announcement, a reminder, if you haven't heard this yet, be sure to put this on your calendar. Our next big Synergy Traders event will be a 3-day event next month in June. So that'll be June 8th, 9th, and 10th. And so on June 8th, Michael will be giving a presentation. That'll be the dedicated Futures Day. Then on June 9th, will be a dedicated Forex Day. And June 10th will be a Stock and Options Day. So Option Professor will probably get him scheduled for that one. So just a reminder, put that on your calendar, June 8th, 9th, and 10th, 3 dedicated days of education presentation. So, all right, that's it. Thanks, everyone.
Thank you.